This is Rod Kusanen, Spooman for Risk on October 13th. It is Wednesday, 2010. All times on the chart are Central Standard Time. This is the second of our videos for today. And if you haven't looked at the previous video, we recommend you do so for further explanation of our retracement lines. But this video is going to talk about a couple of different things that we've done with our system. And you'll notice that there are basically two kinds of long indicators and two kinds of short indicators. We've got a light blue circle and a green arrow, a magenta circle, and red arrows as well. Let me explain what that is intended to tell the trader. We set up our system so that we could identify occasions where there were extreme overbought and oversold conditions. These are based primarily on stochastics using market indicators that are not based upon the ES. These are other internal market indicators. And when the stochastic of those indicators gets to an extreme, such as when on the stochastic slow K is less than 5 or more than 95, we want the system to tell us that. Now, just think about the import of this. Let's look at the move down here. Right here, slow K on the stochastic of the accompanying data feed was less than 5. Now you can't get much less than 5, and you certainly can't get any less than 0. So if the market continues to move down and we're not getting further indications of the market being oversold, then the stochastic must be greater than 5. Okay, that's logic. If the stochastic is less than 5 here, and the market continues to move down, then when it does, if we're not getting an indication that it's still less than 5, then it must be greater than 5. If you're at a lower low on the ES, but a higher low on the stochastic, you have a very strong divergence. Voila, good time to go long. As it turns out, the way we set up our strategy here gave us an indication of a long signal right in here and up the market went. We had retracement points in here as well as in here and up here, just as we had discussed previously. Now on the way up, the market indicators said that we're getting overbought. So as we're moving up, if the trader decided that he was going to use these retracement lines as a target, he could also tell that we're getting overbought, extremely overbought, and consequently taking his profits would make good sense, simply because we're very overbought at that time. And these circles, these magenta colored circles, would tell the trader that. Now we had a mediocre long signal in here. We would recommend to our traders never take a trade that is not previously or that is not preceded by either an overbought or an oversold condition. So this signal preceded by the oversold condition made good sense. There's no oversold condition in here, even though we have a signal. We tend to ignore this. And so I should have mentioned before, This kind of a system you'd want to be trading manually. Manual entries, manual exits. Over here, on the other hand, we have an overbought condition followed by a signal, good time to take a short trade. Now as the market drops, we have that profit target here, retracement line, and followed by an oversold condition. So that might indicate a good time to get out. Now you'll notice as we moved up to this point, again, we're overbought, but we don't have a signal. We're overbought again, don't have a signal. And then we're finally overbought here, followed by a signal, good time to enter a short trade. As we move down, we quickly get into an oversold condition, but we haven't even reached our profit target yet. So a trader might want to be cautious about holding that trade for too long. We get another overbought condition, but we have a retracement down here. We've got a signal here, but that certainly isn't an entry, but is indicating that we're still moving down a bit. Ultimately, we hit that profit or that retracement line, and it turns around and moves up. So you can see this kind of a system is discretionary. As we move up here, again, all sorts of indications of being overbought, and then finally signals at the top of this move, comes down, hits a profit target. We get also an oversold condition. We get some long signals in here, a little bit premature, but the market ultimately turns around and goes back up. Now we would ignore that short signal there because of the fact that it is not preceded by an overbought condition. In fact, we're oversold. But the conditions that provide for that signal did exist at that time. Now, quite unfortunately, we move to the high of the day. Right in here, we're definitely overbought, but there is no signal. We get a long signal here, but no overbought condition. Here we've got overbought as well as a signal, a short signal. We would ignore that. This long signal is really misplaced. We should be at or below where the overbought condition was, so the conditions didn't persist there. Here was not too bad, but it didn't move much, and it wasn't really until the close, just preceded by the the oversold condition, that a long trade once again made sense. So most of that move down, this strategy took no advantage of. Again, it's simply a matter of being able to read these indicators and to know what to do with them. The criteria is we'll go long when the long signal is recently preceded by an overbought condition, or pardon me, an oversold condition. We'll go short when the short signal is immediately preceded by an overbought condition. So in the light of those parameters, this strategy approach did very well. So in the two videos that we've had, you can see that there's a variety of ways of setting up our strategy. It is not a canned approach. The trader has a great deal of flexibility in using our indicators to set up very specific trading conditions that will enable him to take advantage of prevailing market conditions. We have a variety of recommended settings, but the strategy does provide for a tremendous amount of flexibility in how the trader wants to set up his indicator as well as strategy, based on some very sound trading principles. So we invite you to come to our website, take a look at it. As of yet, we really haven't had an opportunity to post much about this new trading system. Most of what you will see on our website is based on our older version, which worked very well, but it was unfortunately just a bit complicated. And so we've taken the best features out of our old system, created a new one, and added some new features that the old system didn't have. That having been said, we now find ourselves in a very good position of trading with high probability trades, high probability retracements. As we mentioned in our video, our retracements today got hit with a probability of 94%. That's very good. We include in our trading system the trading bias that is called repeatedly throughout the day, so that if it changes, you know very quickly. And we also teach such things as the pattern of the day, and how to look for divergence, and so on. So with that thought in mind, we invite you to comment on our video. Give us a call. We'll be happy to run a demo for you. And this is Rod Kusin and Spooman for Risk.